Hello and welcome everybody to live commodity market analysis with the Gold and Silver Club, presented to you today on the 14th of July 2016 by myself, Phil Carr. So today we have a lot to cover with you during today's session. We will of course be covering live market analysis. We will cover a watch list of trading opportunities, particularly after the Bank of England interest rate decision. We'll be having a very close look at that and how that has impacted commodities. We'll provide an overview of the commodity markets, portfolio performance, and of course we'll be answering your questions as always. So any contributions, any questions, do keep those coming in the chat section. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agriculture markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal, and of course it is a pleasure to be here today on FX Street as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldensilverclub.com. Now, before we get into it and we have a look at the impact that the interest rate decision has had on the markets, I want to go through some research and data points with you as it relates to the commodity markets, because we certainly have seen some volatile moves over the last week, following on especially from Friday's non-farm payroll, which I want to cover with you as well. And we can really have a look at this data in context to what we've seen over the last week with the precious metals, with also the energies and the agricultural markets. I can already see there's a few questions relating to gold, its current key support levels, what those are right now, what are the most important. I can definitely assist with that. We'll go into more detail. So what do you need to know right now about gold? Okay, as of last Friday, gold has its best weekly close in 2 years. We'll have a look at that on the chart very shortly. So for those of you who've been following our sessions for a while now, if you've been on our last week's session as well, you'll be very aware of the investment demand that we've seen in commodities throughout the last quarter. It's been some of the highest inflows that we've seen in over 5 years here. Investors at the moment, they continue to load up on gold. A total of 4.8 billion poured into gold last week, which is the largest weekly inflow on record since 2005. Net long positions in gold, they hit a new record high of 2,811 tons last week. That was up 232 tons in the last month. So what does that mean? It means investors, managed money. We've got hedge funds who are all continuing to load up on every single pullback on gold. And gold is looking very interesting right now because it's currently trading around 1,321 US dollars per ounce. So it has pulled back from last Friday's highs here. What was very noteworthy was on gold, the initial shakeout that we got on the non-farm payrolls, which was very quickly bid back up to. So the move that we had on non-farm payrolls was a 300-point drop. We came back down to 1,335 US dollars per ounce before gold was bid back up over 300 points and essentially closed the day right at the not only the highs of the day, but also 2-year highs. So in terms of its actual physical close. So that was very important going into this week. Silver as well, it's held up throughout most of the week. Initially on the non-farm payroll numbers on Friday, knee-jerk reaction was a sell-off. It got bid back up over $1 move, over 100-point move from its lows, and it's maintained its highs pretty much throughout the whole of this last week. So with that, we'll take a look at the charts very shortly, but I just want to make you aware of where the hedge funds are positioning themselves at the moment. Now, not only that, there are a few softs that you definitely want to be looking at the moment. We've also had the USDA reports come through on Tuesday, which have provided a lot of support for corn, wheat, and soybeans. We continue to hold those positions. They're moving extremely well over the last couple of days, following on from the back of the USDA reports, which have seen revised numbers from what was initially provided on the back of the 30th of June USDA report. So we'll have a look at that very shortly. What do you need to know right now? Well, in the softs, we've seen cocoa prices surge to 31-year. Well, we've seen them surge to 39-year highs against a pound plunging to 31-year lows last week. Okay, so cocoa prices, they surged to their highest since 1977, priced in British pounds. Okay, so we haven't seen that in 4 decades. Cocoa denominated in sterling soared to 2,945 pounds a ton. That's the highest level again since 1977. That followed on from the Brexit referendum. So the soft markets you want to absolutely keep on your radar. Also, sugar is another market, and coffee, as we speak right now, is yet again, it's breaking out to 2,000. You can see here it's breaking out currently. I'll have a look at it on the chart. It's at 151. It's breaking out to the highest levels since February 2015. So we are continuing to see strong inflows into the commodities complex. We discussed this last week, but we've seen commodities outperform in 2016, equities, bonds, and all major currencies. And the flows that we've seen have now ranked as the top performers this year: silver, soybeans, sugar, heating oil, Brent crude oil, zinc, US crude oil, natural gas, gold, coffee, platinum, and aluminium. Those have been among the top performers. Now, at the bottom here, wheat and corn have recently ramped up over the last week as well. We continue to see strong inflows. So with that, I'm going to move over to the charts. We'll go over some technical analysis. We will, of course, as always, keep it nice and interactive. So any questions or comments, do just put those into the chat. So first of all, I want to start off with the silver market, and something which I'll just recap on from those of you who may have missed last week's session is silver over the course of the last quarter has officially entered into a bull market. Silver at its highest points over the course of this year has increased by 40% in 2016. So it's officially in bull market territory. If we go over to higher time frames, you'll see very clearly where we've broken out of a pennant formation and a downward trending, very clear overhead downward trending resistance channel, which silver has been in for over 4 years since we produced the top in 2011. So what do you need to know about silver? Silver from 2008 to 2011, during 2 years and 5 months, it rallied 480%, which was a huge bull market run up. Since then, it's been one of the most significant bear markets in history for silver. It's the second most significant bear market that we've been in for over the last 4.5 years until 2016. It started to bottom out. So silver so far this year is up 40%. And this is the first leg up in its bull market run up in comparison to the 2008 to 2011 run up, which was a 48% return. So for that reason, silver is a very hot market right now, and it's worth having on your radar. So at the moment, silver is currently, it's developed a pennant formation throughout the whole week. It has kept a lot of its gains that it formed into the close on Friday's non-farm payroll. You can see supported pullbacks are being bought into. We've definitely formed a pennant formation over the course of this week. Silver hasn't really done too much, but really I would like to see the potential here for a breakout trade on silver here, just breaching above last week's highs, and then we could ramp up, take out the swing high, which was produced over a week and a half ago at $21.13. If we take out that level, it provides an opportunity for the next leg up here. Now, I know there are lots of traders and investors out there who are waiting for a corrective pullback. So they want to load up on silver and a number of other commodities once they pull back. But what are you going to do if they don't pull back? How are you going to get into these trades? So you just want to be mindful of the fact that you don't always see these markets significantly pull back. We've had some corrections over the last 3 to 4 weeks. Particularly the most significant correction was going into Brexit, where we had a pullback. In fact, this was the decline that we saw prior to non-farm payrolls at the beginning of June, when the Federal Reserve suggested that they might be going ahead with interest rate increase in June, but that was very quickly changed when we had very negative non-farm payrolls, the worst in over 6 years during the May, well, the beginning of June non-farm payrolls, which was the data from May, and this sparked the huge rally. And then we saw the Brexit breakout to the upside. So really what you're seeing at the moment is breakout trades on silver. Consolidates and then breaks out, consolidates, breaks out. So you've essentially got a staircase pattern here. So this is what you want to have a look at. And now silver has essentially consolidated throughout the last week. So what does this mean in terms of the interest rate decision? So the Bank of England, they have surprised markets about an hour and a half, well, hour and 10 minutes ago by keeping rates on hold, signaling a potential August move here. So they've defied expectations of a rate cut to a certain degree that was starting to get a lot of traders involved in sell positions, particularly on the British pound. We've also saw that starting to get priced in on equities as well. So this has become comes a little bit of a surprise to the markets here. And how does this bode for commodities at the moment? Well, initially, we have seen a pullback. So we saw a little bit of a sell-off here for gold, for silver. Silver's come back down to test its underlying support that it's been testing all week. But really nothing major here. It hasn't broken down significantly. It's holding on to last week's highs here at the moment. It's still trading above $20 per ounce. It's still been a runaway move in 2016. And I would pay very close attention to breakout points here as well. And there is still the possibility of the banks to consider implementing implications of a stimulus package as well, which has been suggested at the moment. So this is something definitely that you just want to bear in mind right now, is that there are measures in place. The Bank of England said it was likely to deliver stimulus in 3 weeks' time, possibly a package of measures, once it assessed how the June 23rd referendum decision has affected the economy. So this is important. So what we could see is a great confluence here for a breakout. So typically, if you go back to seasonality charts as well, if you have a look at those over the last 30, 15, 5 years for gold and silver, you will note that often they start to really gain momentum over the month of August, which corresponds with the wedding season in Asia, where you see a lot of additional buyers come into the market from the east. And this is something to bear in mind because it's a very common seasonal cycle. It's not the be all and end all. You still need to put into account your research, correlations, geopolitical news, fundamentals, where the hedge funds, where the money managers are positioning themselves, technicals. There's more to it than that. But essentially, there are some very some bullish implementations in the weeks to come here. So I would be watching silver like a hawk at the moment for a potential breakout trade. If it was to pull back and it broke the lower end of this pennant formation, starts to break down, closes below this level of support, breaks below the non-farm payroll lows and closes below that, yes, it's likely for a retest of around $19 an ounce, and then we'll need to assess it at that point in time. It can still pull back significantly and maintain this overall upward trend at the moment. We've had a significant move to the upside, but right now, silver is suggesting that it could be getting ready for the next leg up. It hasn't really been too heavily impacted by the interest rate decision so far, but we'll see how the US, how they react over the course of the US session this afternoon. Okay, so moving on, we'll just move over now and we'll have a look at gold. So there's been a few questions on gold there I can see just relating to the supportive zones for gold at the moment. So what you want to have a look at gold right now is, yes, there is an underlying supportive channel at the moment. We've actually tested a level here. There was a lot of clean air for gold once it broke below Friday's non-farm payroll low, just to come down for a retest of a key moving average here. And you can see where it's pretty much found support so far at 1321. We've also got a trend channel here, which could lend support. And if it holds at that level, you've got a bull flag formation, potential breakout from 1350. That's a level to have a look at for sure. Now, gold in the short term here on the back of the interest rate decision has also been short term bearish for gold, but it's already been, to a certain degree, it's already corrected over the last week here. So if we have a look at the tops from last week, we've already pulled back 500 points. We are definitely getting towards an area of value here, a supportive zone for gold at the moment. Typically, the 21-day moving average, which we're retesting at the moment, has been providing quite a lot of support. You don't just want to look at that. There are a number of other factors, such as investment demand, which as of the close last Friday was at its highest level since 2005. So there will be very likely traders getting in soon. What you need to note on gold is that you will see these corrective pullbacks and suddenly big inflows come into the market. Non-farm payroll, we had a huge inflow. Brexit, we had another big inflow. So what you'll have here is a lot of traders waiting in the sidelines, and they're waiting for an opportunity to get a good price, and then obviously they go in big, they go in heavy. And if you are not around at your trade station, or if you don't have alerts ready to go, if you're not paying attention, you can miss these moves very quickly on gold. Gold is not giving these sort of slow and steady entries at the moment. You need to be on it. You need to know what gold's doing, and you need to be aware of the key levels that it's moving to, be aware of fundamentals, geopolitical news, have your alerts ready. And then when it's time to get in, you need to be fast acting on gold, because gold over Brexit, it moved 1,100 points in a day. Unprecedented move. Over the course of non-farm payrolls, we had over a 380 point move off the back of that. In fact, 400 points from its low to its high. And we're seeing this a lot on gold. If you're not fast and be able to react to the market conditions, you will miss opportunities, and you get in too high, you get in at the wrong price, and then you have to pay for it. You have to suffer when gold pulls back, potentially get stopped out of those trades, and that's not what you want. So right now on gold, what do we perceive as the support zones? Well, obviously there's underlying support at 1297, 1300. That is to be taken as a major Fibonacci level at the moment. Whether gold will get that low is questionable. Obviously, if it does, that would be a good opportunity to load up on positions, as long as it gets supported at that zone and we do see confirmation. But it might not even get that low. This could be the low at the moment around the 1320 zone. We'll have to see as we approach the US session this afternoon. What I would suggest is there is clean air for gold if it breaks below this level, closes below it. There's a lot of clean air for in the region here of gold to break through about the 1318 down to about, you can see the 1300s. There's about a 200 point move, and there's not a lot to support gold if it does that. So a break below that level, yes, I would look for just a move down to 1300s. Obviously, that would represent a good buying opportunity, but this could also be it around the current level. But we need confirmation. We don't have that confirmation at this point in time, but I would watch that very carefully and look at for the correlation here on silver as well. So right now, those are the key levels. Keep an eye on the current level of gold right now, 1325. If it was to start to ramp up beyond this zone, I would look at 1350 as a potential bull flag breakout pattern here for the next wave higher if it finds support at this zone. If it breaks down a little bit lower here, I would look for underlying support to be sat at the 1300s. You just need to watch it carefully, because what you see is sudden big inflows, because hedge funds, obviously, they're loading up on positions at the moment. So what does that mean? It means when they go in big, and the market moves very quickly. We're not seeing slow and steady moves on gold. We see big positions go in. So that's ultimately what you want to be having a look at on gold at the moment. If there are any questions, guys, I've just quickly moved over to another screen, so I will bring the questions back up as we go towards the end of the session. I'm more than happy to go back to those, but we'll just continue with some of the other markets for now. Another position which we are currently in at the moment, which has moved really well actually since our entry, has been corn. So corn ramped up this week following on from Tuesday's USDA report, which was bullish. So overall, they did revisions of the previous USDA report, which was on the 30th of June, which caused this large correction to the downside. Corn got very oversold on a number of different timeframes so far, forming a V-shaped reversal pattern, snapback in price at the moment. We're at 371, so we've moved really well on this actually since our entry earlier on this week, following on from the USDA report that was bullish for the core market. So with that, we've had a really nice snapback in price here. We got very oversold. If you go over to higher time frames, the weekly chart, you will see nice rejection candle on the weekly. It's really ramping up. It's got a lot of upside potential here for corn, I suspect, in the weeks to come here. It's back at a very key area of value, and we can see big inflows have come into corn over the last 48 hours following on from the USDA report on Tuesday, which we've broken down and provided a lot more detail to all of our traders. I won't go through every single aspect of that report at the moment, but of course, members of the Gold and Silver Club, they get full disclosure of all of that information. And in fact, on that, we'll provide you with details at the end of this session. If that's something that you would be interested in, understanding the exact entry, exit, every single trade that we take at the Gold and Silver Club, you can gain access to that. We'll provide you information at the end of today's session. A question that I get a lot, of course, as it relates to gold and silver is, you know, the markets have been in a bull market, or you know other markets such as coffee, which we'll have a look at right now, have been moving well over 2016. Your question is, when should you get into this market? This is the weekly time frame for coffee. Of course, we can help you with that. We'll provide you details at the end of today's session of how you can actually become a member of the Gold and Silver Club. So this is coffee. And coffee at the moment is now broken out to the highs from February 2015. This market, you can see, this is on a weekly chart. It's overall been bottoming out over really the last 2 years here. Really nice. You can see the overall pattern here as it's continued to bottom out. And we've now broken above a very key neckline on coffee. We continue to have longer term positions on this market. There's been a lot of pressure building actually at this resistance, and it's just popped above that level today. Again, this is a market that you do not want to miss. We've had longer term positions on this for about 3 months now, as we've continued to see it move from a bear market into a bull market, and it's only just warming up in our opinion. This is really just the start for coffee here and a number of other markets. So you can also see very similar inflows to sugar, which is ramped up in a big way over 2016. This has moved over 30% to the upside. In fact, I quite like this retest of the lower end of a major supportive level. We've got a setup starting to develop here, a little bit similar actually in terms of gold right now, where it has the potential to develop into a bull flag formation and then break out for the next leg higher. It's had a corrective pullback from its 2-year highs here. We pulled back, and now it is getting ready to potentially for its next leg higher here. We're watching this very closely, but from a supply and demand point of view, there's more upside potential on sugar. So again, this is a market that we're watching very closely into the US session this afternoon. We've got longer term positions on this, but we would like to take on another swing trade as well in this market. Cocoa, as we mentioned, cocoa has been ramping up in the British pound. It's the best breakout that we've seen since 1977. So we've continued to see strong inflows in this market. Got all of our levels here. Cocoa actually is ramping up again today. We continue to be in this. We got a 200 point, in the region of 200 point pullback, gap down on Brexit. That has now been bought back into after it got a lot of key support. You can see here technically where it got support. And again, from a fundamental point of view, we've continued to see upside momentum on cocoa. This is a great market. Again, if you're not trading it, you want to be trading it. As we mentioned, guys, several times over the course of today's session, this is the inflows into commodities. And really, they're just getting warmed up. We're seeing a transition from a bear market into a bull market. The performance on commodities this year has been some of the strongest moves that we've seen since 2010. We've continued to see very strong surges, and there's lots of opportunities at the moment as uncertainty continues in global markets. So you don't really want to be missing out on the current trading opportunities. The last market I'll cover for you is oil, which we've continued to have sell positions on since Brexit, as we've continued to see this decline in price. We've really just seen oil ricochet between support and resistance. It's sitting towards the lower end of its trend channel at the moment, just consolidating. It's not really done too much this week. We had a breakout to the upside earlier on Tuesday. That sold off again yesterday. We've really just consolidated. Last Thursday, we had quite a big breakdown in price. We've got key levels of support that we're looking at here for a potential wave lower. If it does, we're looking between the 44.80 to 44 zone for the next move if it shifts lower. Otherwise, we could just get a retest of the upper end of resistance here, which is around the 47 level at the moment. So we're watching that. We've essentially called the top here over the last about 4 weeks ago, I think, on one of the sessions that we've done live with you. We've discussed this top in the market, $52 a barrel on higher time frames. We've continued to see that roll over and break down. Oil is just grinding at the moment, grinding its way lower. We continue to have our sell positions on this market, but we're watching it very closely. We've got those trades protected and we're in significant profits on those, but we may come out of those in the weeks to come once we do find underlying support here for oil. So that's essentially what we're looking at right now. But I would definitely have your eye on some hot markets today, particularly the softs. Again, we're seeing those. If you don't trade those, you want to have access to those. So again, I'll just put those back on your radar. Coffee is ramping up today. It's just broken above. We're on the weekly. It's just broken above major 2-year highs here. If we go over to also cocoa is on the move again today. We've just broken above the last about 3 weeks worth of highs, and also sugar is soon to also be providing us with another opportunity to re-enter into this market. You can see this is starting to build up. We definitely want to add another position to this, and also keep your eye on gold and silver. They're grinding lower at the moment. So we'll keep an eye on the key zones that we've discussed with you just now. So we'll be looking at these key areas of underlying support, but we'll be watching those very closely into the US session today and towards the end of this week as well. Okay, so with that, let me just quickly, I'll go over to our portfolio performance. Just prior to that, we will just quickly bring up any additional questions. Okay, no, perfect. So let me just talk you through our portfolio performance at the Gold and Silver Club. So this is our portfolio performance, our trading performance update using our exclusive research-driven strategies. I'll talk you through our swing trades, some of the positions that we banked profits on. We continue to have a number of long-term positions on as well, but we also do a combination of both. So we take swing trades where we're regularly banking trades as well as keeping our long-term positions on as well. So we hit one of our profit targets again last week on Thursday, came out of a trade for 410 points profit as we reached the 2-year highs here for gold. So that was a nice mover, especially we saw some good price action over non-farm payrolls. We banked that position prior to that. Cotton as well, we came out of a 450 point breakout. In fact, I didn't show you cotton on the chart. I think what I'll do, that's had a tremendous move over the last, in fact, let me bring it out for you. Let's just have a quick look at cotton just to give you an idea of what commodities are doing at the moment. Perhaps you haven't seen this chart. This is the breakout move that we've had over the last week. Significant surge to the upside. Coffee's been a great market. Cotton, sorry, has been a great market. So we banked out of one of our swing trades, continue to hold longer term positions on cotton and also light sweet crude oil. We came out, we had a big shift lower last Thursday. So we came out of one of our positions for 390 points profit. But again, our trades have been protected and we continue to move to the downside on WTI. As I've just gone through with you, it's just grinding lower slowly but surely on higher timeframes. So again, if you would like access to highly profitable live trading ideas that are shared with you, ready to implement rather than doing all of the hard work to find them yourself, there is of course an opportunity for you to join us at the Gold and Silver Club, become a member, get access to everything that we have discussed. So that includes the following I'll go through very shortly. So whether you're a new trader, you're looking to develop a solid understanding of the markets and fast track your results, or even if you're an experienced trader and you want to really take your trading to the next level, you want to learn to trade commodities, they're only really just getting warmed up at the moment. There's a lot more potential for these markets in the weeks and the months to come. So the private members live trading room, I will go over exactly what that includes. So with that, you get exclusive weekly live trading room webinars. You get live trade recommendations ready to implement. You get real-time trade notifications by email, SMS, so you don't miss any profitable trade opportunities. You get exact details of where to enter, exit, place your stop loss on each trade. You get live support through our webinars, our live trading rooms that we host throughout the week, as well as one-to-one mentorship as well. You get customized technical charts and indicators to boost your win rate, and of course exclusive access to our proprietary trading research to give you the ultimate edge in the markets, of course, plus much more. So to get access and become a member of the Gold and Silver Club and our private members live trading room, all you need to do is go to www.jointhegoldensilverclub.com. Okay, complete the application form and we will get in touch with you ASAP. So as I've identified today, there are a number of markets which are on the verge of their next leg up at the moment. That includes a lot of the agricultural markets, and we're getting some good opportunities. Well, certainly if we have a look at the grains, we've got some really nice opportunities brewing, and also on the softs as well. Gold and silver are getting poised for the next move here, and I would suggest again you don't want to miss that. But again, it's always more difficult, especially if you're a newbie trader. I appreciate a lot of the traders who come on these webinars with FX Street. You're very advanced traders. You might be more advanced with forex, with stocks, but you're just interested to get a little bit more insight into commodities trading. Of course, we can assist you there. So all it is to make an application is www.jointhegoldensilverclub.com. Okay, so I'll just double check any additional questions there. And gold, silver highs, I believe we've answered your question there just relating to gold. Any more questions on that, do let us know. Hopefully that gives you some good insight, guys, into what we can look at in terms of a trading plan as we go into the US session today, as we go into tomorrow's close as well. Be mindful of where we are sat in the context with a lot of commodities right now that have really entered into a bull market, but there's still time to get into these positions. Gold in particular has had a corrective pullback over the last week. I would watch that very carefully. So as I mentioned before, you can blink and miss a move on gold at the moment. You need to be on it if you're trading gold, looking out for these buying opportunities. Once the big boys, once the hedge funds come in, it moves really fast. So just be aware of that for those of you who love trading gold, and feel free to get in touch with us. So with that, guys, I wish you good trading. Of course, as always, have a fantastic weekend, and we shall speak to you very soon. And of course, I look forward to working with those of you who will be joining us as members at the Gold and Silver Club. Okay, thanks, guys. Thanks to FX Street, Dinda, Mauricio for hosting today's session, and we'll speak to you guys very soon. Thanks, guys. Take care. Bye-bye.